JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 7th of October 2021. So yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest, and we can continue. Okay, so now then, as always, just before we jump into the charts, as always, yep, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So, yep, check us out here, and yeah, I believe you can find some useful information here. So, yep, let's now just jump into the charts. Well, I can see the chat room here. Good morning to Kai, Uwe. Yep, so I hope you're having a wonderful start of this morning as well. So yeah, jumping into the charts, we can see that Nikkei here did rebound somewhat, and it remained above this hurdle, the one that I kept talking about, this 27,000. 480 zone, and yep, it did push higher yesterday. As you know, the U.S. equities did recover somewhat at the end of the trading, at the end of their trading session, and today the Asian markets followed suit and managed to recover somewhat. So in a way, for now, this idea that I mentioned in the beginning of this week, it seems to be working out, because what I said, that if we drift lower here but find support somewhere near this low of the 27th of August, around that 27,480 zone, then yes, we might see a nice little rebound here and a push back up, where we could maybe test the 200-day EMA or this downside resistance line taken from the high of the 18th of March. So far we did rebound. We did move a little bit higher. We tested the 200-day EMA. But yeah, for now, let's see if we could get a bit more recovery here. But of course, we'll consider that idea if we'll continue seeing this index trading above this hurdle right here, this low, the 27th of August. If it does that, then yes, we could see a nice little rebound. But if it struggles to get back above and stay above this downside line here, then another slide could be possible. We could totally abandon this scenario if we see a drop straight away below this 27,480 zone, and then yes, we could aim for that lowest point of August near the 26,955 level, and then we'll take it from there, of course. Hong Kong's Hang Seng Index did recover, yes. Yep, some positivity kicked in. However, if you remember, I talked about this index already, and basically what I said, that for now, the overall picture, yes, it's a little bit on the bearish side, because we are forming these lower highs here, but recently we saw a nice little hold up near this 23,771 territory from where we rebounded, but we're now stuck in this little consolidation area, this little range, and what I said to you previously, that maybe, just maybe, we could be having ourselves here a nice little beginning of a double bottom here. However, the neckline of that pattern would need to be broken first, And then, yes, we could consider a move a little bit higher towards this downside line taken from the high of the 28th of June. And then again, from this is where the point we'll have to just take it from there. So basically, long story short, in the near term, if we pop above this 24,695 territory, at the same time, we could be placed back above the 21-day EMA. And yep, this could lead to a test of this downside line taken from the high of the 28th of June. But if that gets broken, certainly, yep, we could go for some higher levels. But again, let's see how that's going to play out. For now, it is a tricky one here. So let's see which way this one's going to break out to. For the downside, as you probably understand, we need to see another drop here below this 23,771 territory in order to get a little bit more comfortable with the downside. The German index DAX, so yesterday was quite an interesting moment. So yep, as you can see, we managed to reach one of my levels here, this 14,816 territory, which I talked about in the beginning of this week. So that's a good achievement here, because we dropped below that 200-day EMA, and this is what I said, that if we fall below that, then yep, my next target is this 14,816 territory, which yep, managed to reach. So now the big question here is, can we see a reversal? Because as you can see, the daily candle still ended up being closing above this 200-day EMA. So we had a little, I would say, a false breakout here, yep, and this is where probably some of the traders got stopped out, and basically we're now back above this 200-day EMA. Looking at the cash index, we are trading at around 15,178 levels. So basically we're kind of somewhere here again, and this just kind of proves to me that and proves to kind of the point that basically you always need to wait for that confirmation close or break, or depending on the situation, of course. But in this situation, if you wanted to go for lower levels, well, we needed to see, if you missed this drop here, then the next step is to wait to see where the daily candle is going to end, and if it stays above it, let's say above this 200-day EMA, then there is a decent chance that we could see a nice reversal back up. And this is exactly what we are getting right now. However, now looking at this picture, in a way, how to approach it now, let me just quickly see something here, if this is going to work out or not. So basically we have this downside line, which, to be honest, this one's taken from the high of the 27th of September, and to be honest, looking at the cash index, yep, it got broken. So because the cash index is currently sitting at around 15,179 level, so there is a good chance we could see this one pushing higher. However, let's see what level we could keep an eye on here. Now, previously in the beginning of this week, I talked about this 15,246 territory. However, probably we could adjust it now, and we could just basically stick to this high, the high of the 5th of October, and also the current highest point of this week. And if we pop above it, this level is around the 15,202 zone, and if we pop above that barrier, then certainly, yes, there could be a greater chance for this pair, for this index to move a little bit higher here towards to go for a larger correction to the upside. So yep, for now that's the game plan. So let's see how that's going to play out. If by any chance the index starts falling back down here and falls below the 200-day EMA, then yes, we could consider the downside again. In the near term, of course. However, if we take a look at Dow Jones Industrial Average, we can see that, yes, a beautiful recovery yesterday. So we failed to even get close to this area, this 33,741 territory. I spoke about this level, and instead we reversed and pushed higher, and we ended the day just kind of bang on this 108 EMA, and one of my levels here, the 34,410 zone that I spoke about previously, got tested, and this is where hold up occurred. If we take a look at the cash index, we will see that the price continues to push higher, so nice and comfortably here. So yep, we're currently sitting at around 34,608 territory, so basically somewhere around here. Basically, we're back above all of the EMAs, and if as long as the index today stays above these EMAs here for us, then we will aim for that downside line taken from the high of the 2nd of September. And then we'll take it from there, guys, because then it will be interesting to see if this downside line provides resistance once again. So, long story short, for now, I'm leaning a little bit more towards the upside here in the near term, but we'll keep an eye on this downside line taken from the high of the 2nd of September. Another index here, but the dollar index, so yep, had a good move to the upside yesterday, but failed to reach the highest point of September, near the 94.50 territory. So, as I mentioned to you previously, that in order to go for the upside, we need to see a nice good push above that barrier first, and then we could go for some higher levels. For now, this we're stuck here still above this upside line, but below this barrier. So let's keep an eye on this one, and let's see where this one's going to break out to. But for now, I'm leaning a little bit more towards the upside, of course. However, a confirmation break of this barrier is needed before getting a little bit more comfortable with the upside. Now gold. Gold is a tricky one here. So gold is still trading above this downside line, the one that I talked about previously, and this downside line is drawn from the high of the 3rd of September. And yeah, so for now, I mean, you can see that this downside line did its job in a way. It did kind of act as a nice little trampoline. Yep, this is what I was talking about in the beginning of this week. And however, it's not really a good indication of that for gold to kind of, let's say, reverse and move higher. For that, I would rather wait for a break. Now, if previously I talked about the 1776 level, to be honest, the way everything's shaping up, I will probably stick to this level here, the current highest point of October, near the 1770 level. A nice good pop above it, yep, would confirm a forthcoming higher high, and the next target could be the high of the 22nd of September, near the 1787 level, and then we'll slowly take it from there. For the downside, now again, previously I talked about this level, this 1745 territory, and to be honest, it could remain valid, but depends on what's going to happen with this downside line. However, probably I will have to get rid of it eventually, because in a way it seems to be becoming less and less valid. So I'll keep it for now, but the main kind of option here for me after a break of which to consider the downside would be this a break of the 1745 level, and then yes, we could go for some lower levels, because as you can see yesterday, for example, this level acted as perfect area of support from where the commodity rebounded. Now jumping into WTI oil, and yeah, beautiful reversal here and move back down. However, will this actually be a move lower? Well, to be honest, seeing these scenarios happening, so we could be maybe seeing the beginning of a bearish 3 pattern here. However, we need to see that pattern working out first. But again, if for example the subsequent candles, daily candles here will go higher, but let's say they will remain within the body of this previous this falling candle here, then yes, we could be getting that type of a pattern, which is considered to be a bit of a bearish one, if we can say it this way. But again, before kind of getting ahead of myself here, for now probably let's keep it short and simple. And if we do drop below that 76.88 level, which is the highest point of 2018, 18, then yes, we could go for some lower levels, and then we could maybe test this this upside line taken from below the 23rd of August. But again, for now, that's why I'm saying that this is a bit of a difficult situation here. If you want to aim for higher levels, well, I mean, probably the safer option is to wait for a push through this. Through the high of the yesterday's high near the 79.78 zone, or sorry, 76 level, and then yes, we could go for the upside basically. But for now, long story short, let's keep an eye on this one. Let's see if this hurdle continues to provide support. If it doesn't, then yes, we'll aim for this upside line. But if it does continue to provide support, maybe a bit of a retracement here, a backup could be possible. However, don't think that it might be a huge one here. Like I said, it could be just forming a few candles here, let's say to the upside, and then maybe dropping lower later on. But let's see if that's going to play out or not. Bitcoin. So Bitcoin, looking at this picture here, well, Bitcoin actually continues to rally nicely, and it's the best performer from the kind of most of the top cryptos. And as you can see, yep, in the beginning of this week I talked about this one, and I said that if we pop above that 49,000, let's say 200 zone, then yes, my next target is the highest point of September near the 52,888 level, which we managed to reach and actually overshoot nicely. So now the question is where we'll go next. But to be honest, let's be a little bit more careful here. Even if we see a little bit of a decline here, I would say that as long as it stays above the highest point of September, we might see maybe another push higher. So let me just bring out a curve line here. So something like this could still be possible. Now, if it falls below this hurdle, below this 52,888 zone, then I'll take a bit of a neutral stand here, because maybe it's going to start like consolidating somewhere here. But if it starts falling somewhere back below this 49,200 territory, well, then yep, we could consider maybe a bit of a larger correction here to the downside. Or if you like the more beautiful number here, the 49,000, yep, could be that indication for a possible larger correction to the downside if we break that level, of course. And now jumping into EURUSD, so this one's quite interesting, looking quite positive. And if you remember, I talked about a potential inverted head and shoulders pattern here. So let's see if that's going to work out or not. First of all, let's get rid of this downside line, or actually let me just reuse it and mark this tentative downside resistance line taken from the high of the 25th of February. And yeah, so if we manage to push above this 0.7315 level right here, now this is where could be seen as that so-called neckline. If we pop above it, then yes, there are more buyers could join in here and potentially drive this one a little bit higher, maybe towards this 100-day EMA initially, or towards the 0.74-100 level, somewhere around here. But again, you can see that basically we might have already completed that right shoulder. So let's see if we actually break the neckline. If we don't, as long as let's say the pair stays in this little range right here, then I'll take a bit of a neutral stand. But if it falls below the 0.7220 territory, somewhere around here, then yes, we could consider a move lower. We could aim for that lowest point of September near the 0.7170. A break of which, yep, could open the door towards lower levels. But again, let's not rush into anything. For now, let's keep an eye on this barrier here, the 0.7315, and let's see how this pair behaves around that area. Quick update on USD JPY here. Now, basically, looking at this picture here, we can see that we are kind of trying. We tried yesterday to push above this 111.66 territory. We did make an attempt here, but we failed. Now, my little concern here is that I wonder if this is not going to start forming somewhat of maybe a triangle pattern or something like this. So initially, basically, I can say that yes, we're trading still above this steep upside line, but on the other hand, we do have this downside line right here, taken from the high of the 30th of September. And yeah, so in a way we're kind of stuck here in this little squeeze. In order to go for the upside, and probably previously I looked at this 111.66 level, now probably it's going to be invalid. And if you're looking for the upside, then at least wait for a push above yesterday's high, which is also the current highest point of this week, near the 111.79 level. And if we pop above it, then certainly yes, the next target is the highest point of September, near the 112.08 level, and then we'll slowly continue aiming higher. But that's in terms of the upside. In terms of being a little bit more careful in terms of the downside. Now, break of this upside line here, taken from the low, the 22nd of September, and also a drop below the 110.82 level, could do the job for a few more. For a few more sellers, and more of them could join in and potentially drag this one a little bit lower, maybe somewhere towards this 110.08 level marked by the inside swing high of the 17th of September. Now, USD, US dollar against the Mexican peso, this is what I talked about yesterday, if you remember, and I said to keep your eyes on this highlighted territory. We did get a breakout here, but you can see that the pair, the sellers managed to bring the pair quickly back down here, back below this area. So I'm still keeping an eye on this area, this highlighted one. So I need to see a daily candle staying above it in order to get a little bit more comfortable with the upside. For now, I'm neutral and I'm just going to observe this. But if it starts falling somewhere below this 20.41 territory, yep, that's where we could go for a bit of a corrective move here to the downside. But then keep your eyes on this tentative upside line. Now, jumping into US dollar against the Russian Ruble, also quite an interesting one. So yes, we are still drifting lower. However, recently we had a bit of a hold up here near the 72.14 zone, approximately around here. That's the lowest point of September, and this is where currently the pair is getting a hold up. However, at the same time, it actually is continuing to form these lower highs. So of course we understand that this is a good reaction to the oil market here. So the price of oil was rising nicely here. So yep, making the Russian ruble stronger. However, if we do see WTI oil right now correcting nicely to the downside here further, then well, we could expect this pair to move further south here. So keep that in mind. And now US dollar against the Turkish Lira, very quickly on that one. This is quite interesting because, first of all, after we've hit a new all-time high near the 8.9557, approximately around here, we then start moving sideways a little bit, but in a way it's not really like a sideways move. It's more of a squeeze right now. However, at the same time, the pair continues to trade above this upside line taken from the low of the 7th of September. Now, in regards to further steps, well, pretty straightforward, to be honest, because we need to see a nice good pop above this 8.9557 level before, let's say, targeting the upside, because this would confirm a forthcoming higher high. And for the downside, a break of this upside line may signal a possible kind of opening here for lower levels, and then yes, more sellers could join in. But again, we need to wait on this one, but it could be quite interesting. Quickly, GBP CHF, haven't looked at this one for quite a while, but as you can see, since around mid-April, the pair has been moving sideways and kind of oscillating around some of these EMAs here. So basically, in other words, for now, we're keeping a close eye on in order to kind of understand where the next maybe medium-term directional move could be. But for that, of course, this kind of range would need to be broken. However, from the very short-term perspective. Now, first of all, we can see that we are trading below this downside line still, although we had a few overshoots here in this week, but still we're below this line. However, that doesn't mean that we're now going to drift lower, because to be honest, for this one, I would rather stick to maybe to the current lowest point of October near the 1.2504. A nice good break below it, yep, could open the door towards lower levels, and then we could take it from there, of course. For the upside, I would prefer to wait for a push above this 1.2661 territory in order to get a little bit more comfortable with the upside. So again, that's the game plan, and unfortunately maybe not ideal, but we rather be safe than sorry. Euro Aussie very quickly now. I wanted to show you this one because we are at a very interesting spot right now here. We are near this medium-term upside support line taken from the low of the 18th of March, as you can see. So now previously it was looked at more of as a tentative one, but however we are getting a little hold up here, and yeah, let's see if we can break this upside line. If we can, then we will aim for lower levels, but if we cannot, then maybe a bit of a rebound here could be possible. In order to aim for, let's say, for the upside in the near term, to be honest, I would rather see kind of maybe a push back above this 1.5995 level here, which is the current highest point of this week, and then yep, we could go for this downside line taken from the high of the 20th of August. But of course, all eyes right now are on this upside line taken from the low of the 18th of March. Let's see if that gets broken. If we do see that getting broken, and we see the daily the body of the daily candle staying below it, then yep, we could maybe consider further declines. But like I said, let's be careful. Let's not rush into anything. Wait for that confirmation. And finally, EURUSD. So beautiful move lower. This is what I talked about well, from the beginning of this week. Basically, if you want to aim for lower levels, then wait for at least a drop below the 1.1563 territory right here, which we managed to get. So we broke that level. This confirmed the forthcoming lower low. The pair stayed below that area as well, and today, although we're seeing a bit of a retracement here, the pair continues to respect that level, and this time as a strong resistance. So if it continues to do so, then yes, we will aim for lower levels. If you want to be a little bit more on the safe side, you could keep an eye on yesterday's low near the 1.1529 zone. A nice good break below that may clear the path towards lower levels, and we could slowly then drift to the downside, and then we'll take it from there. But as I said, as long as the pair stays below this 1.1563 territory, then there is a good chance for this one to move lower. The break below the 1.1529 zone is the more maybe cautious approach. However, again, let's see how this is going to play out. And again, don't forget that tomorrow we do have the NFPs, so we might see bit more activity going into well, tomorrow instead of today, so keep that in mind. The pair might stay somewhere in this little territory, but again, let's not over speculate on this one. If by any chance the pair climbs back up above this 1.1563 and stays above it, then I'll take a bit of a neutral stand. But if it breaks this downside line, this is where it could become a little bit more interesting for a few more buyers in the near term. So guys, that's it for this session. I really hope you found it useful, and thank you very much for watching and listening. I really appreciate your time, guys, your views, your likes, your comments. I really appreciate all that, and thank you very much for joining in. I hope you found it useful, as I said. So yeah, if you want to catch me tomorrow morning, as always, at my Traders Espresso, 6 o'clock GMT time. For now, have a wonderful trading day. Stay safe. Have your stop losses in place, and everything will be fine. So have a nice day. Have a nice day. Bye bye.